UnitedHealthcare is under federal investigation for potential fraud, and the stock is collapsing. Since the CEO of Change Healthcare was killed on December 4th, 2024, United Health has lost more than 50% of its value. But is this panic justified? In this video, we dive into the valuation and whether the current price reflects the true worth of the company. Let's get into it. Welcome back to another video. My name is Robin and I'm joined by Kirill. And yeah, we're diving into United Health Group today. Kirill, we have this three-step process of uncovering a valuation of a stock. And of course, we will go over what's in the news, the company fundamentals, and just the analysis of the overall numbers of the company. And then, of course, we will leave you with the valuation. And that's the value that you're going to get out of the video today. So, Kirill, let's jump into the news.
Yeah, it's big stuff. Big stuff is happening. So before that, United Health was shocked and pretty much damaged by the assassination of the CEO of one of the business units under the United Health company. And now it makes it even worse. That's why the stock is going rapidly down as well, because United Health Group is now under the criminal investigation for possible Medicare fraud. Nothing is really has been published so far with regard to what the allegations are, what the court case is all about, but it's an ongoing investigation. And as you can also see, the DOJ spokesman also declined to provide any comments on that. But you could already see how big the stock market has already reacted to the news. So over the past couple of days, as you can see, the stock went dramatically down by 15%. It recovered a little bit from the lows of $255 per share, but it's still way below what it was before the assassination of the CEO, of up to $610 per share.
Yeah.
So what we thought with Robin would be kind of nice to have a look into the is all of these situations are of course terrible for the company, but how did it actually affect the stock and especially its valuation?Maybe it's actually a good opportunity to jump on it if you're interested.
Yeah, exactly. And also with these things, when there are little details and it's a lot of fear, then you'll see that investors are making decisions with their emotions. So it's a good opportunity for us to see what are the potential setbacks for them. And Kirill and I also discussed this before we started filming of how these processes are normally picked up, and we cannot really elaborate on how much effect it will have, but knowing how these cases goes, I don't think it will be the end of the company.
Yeah, and also there's also one great relevant, more or less recent case that we, at least in the Netherlands, are pretty much aware with Robin with regard to a company that is called NN Group. So it's also a big insurance pension conglomerate in the Netherlands and in Belgium. They had pretty much similar court case situation, and then we can also see how the stock would react. And then maybe it's something that might potentially also happen to United Health Group stock as well. But without further ado, let's get into the financials.
Yes. All right. So for the fundamentals, we can, if you can scroll down a bit, Kirill, then we'll see that they have green check marks all the way. So double-digit revenue growth, average net income growth is growing with almost double digit as well, growing free cash flow. Debt is covered by the long-term debt is covered by the free cash flow as well, which is good. So if they are in a pickle like they might be right now, they have cash on hand to deal with that. Then they are buying back shares as well, and they are giving a dividend. So they're really good on giving the shareholders value in two ways, or in giving dividend and increasing the share price by limiting the pool of shares.
Yeah.
So all in all, pretty good.
Yeah, from the perspective of a shareholder, it looks really great, especially on the growth parts of things, because everyone knows that, let's say, United Health is not the best company out there from the perspective of how they're, squeezing the customers, trying to pretty much make as much money out of every single policy that they sell as possible, and provide, let's say, quite a minimized coverage. But yeah, again, here we're not talking about, let's say, the customer side. We're talking about this let's say, play that might work out in the nearest future with regard to the valuation. Yeah, what else can we see from the key financial results? Pretty much a little bit normalized selling and general expenses. The interest expenses also more or less peaked from 2023-2024 times. Share buybacks, as Robin has also mentioned, is gradually happening as shares outstanding are going down. So also good to see. Only maybe a little bit of a trouble to see that they're also getting more debt. So you can see also that all the liabilities and long-term debt are rising. But again, as Robin mentioned, it's covered by the free cash flow, which is completely fine then. So you're quite comfortable. Yeah. So to be honest, so far so good, especially for an insurance company, which is really hard to grow.
And if we also now just put it into perspective with ratios, for example, with selling and general expenses rising, it's really correlated with their overall growth. So the rising of the selling and general expenses are pretty well explainable, and they're under or around 50%. So that's great. It's not too much. They don't have really an issue obtaining new clients. Yeah, but they don't need a lot of marketing, let's say, to get more clients on board. The revenue growth has been slowing down greatly. What is the key? Hover over the images and
Yeah. So again, of course, because if your revenue growth is, let's say, around around 10-12%, with again a little bit of increasing expenses and a long-term debt, for example, then you're also gonna probably have some troubles with the bottom line as well. So the free cash flow growth has been declining for 2024, which is a little bit concerning, but to be honest, pretty much expected, just because how big of a behemoth it is. So it makes sense. It's just like a company that is too big to fail, kind of caliber of a company, but you would also not really expect it to grow like any other big tech stock.
exactly. And most of these growths also come from mergers, acquisitions, basically.
Yes, correct. Yeah, and also what probably one of the biggest troubles for the company is that, again, because they are probably committed to decrease in the shares outstanding and increase of dividend growth. Let me just try to. Yeah, because the dividend growth of about, let's say, 11-12% a year, that's quite a lot. And then for you, in order to sustain it with decreasing revenue growths and the cash flow growths, then they're probably piling up on debt in this case. So maybe something to be cautious about in the long run.
Yes. All right. We can continue and see if there's anything operating profit margin. Yeah. It's just decent.
Yeah, and to be honest, also again for the insurance companies, the biggest factor is really just having enough cash on hand just to pay out all of these, obligations in front of your customers for the policies that you sell. So as long as that's okay, you're gonna be fine as an insurance company. So that's okay. And then again, look, if it's one of the biggest ones out there in US, if something is going to happen to it, then probably something completely wrong is going in the whole probably financial sector, banking sector in USA, and probably in the world as well. So,
Indeed. All right, and now we're gonna go to the section where you're here for. We're gonna go to the valuation. So, Kirill, let's check and see what the company's actually worth.
yes.
Let's just switch between the assumptions. Maybe we do it for 5 years.
Yeah, but then
Maximum.
you remember when
Yeah.
we saw that after last 5 years, the growth on the top line and bottom line have been quite, going down. I wouldn't call it super significantly, but still from the 10, 11, 12% per year for the revenue growth, it went down to 4.5, which is quite a lot. And then you see again, free cash flow growth has been even declining. So danger.
Um, but what should we do? What's realistic? Are we
Mm,
going for the 3 years or?
I think maybe we can just. You can also check in the meantime the Yahoo Finance analyst maybe what they also
Of course.
say, but I would say we can just take the assumption of, let's say, around 4% growth just to be realistic. We can also bump it up maybe a little bit, but then just put a higher margin of safety just to account for these kind of troublesome potential situations of us just putting too good of assumptions for the growth. But yeah, in the meantime, we can probably just fill in the other points while Robin is searching for the analysts' assumptions and estimates. Yeah, so we just take the free cash flow starting point of last year, makes sense. Projection period, to be honest, I would also be comfortable putting 15 years. Again, insurance company, big behemoth. It's like a Coca-Cola, Pepsi caliber of a company. So it's would be very surprising if it's gonna, disappear in the upcoming years.
Um,
Yes.
they talking about um for the current year that it's gonna grow minus 15%, and
Mm-hmm.
next year plus 18%.
Okay. Yeah, and then let's say on average that would be around. So you said 15 and 18, right?
Yep.
Would be okay for 3% at the end of the day. But then it's only for the upcoming year and then a year after, right? Is there any
Mm-hmm.
longer range present there for the growth?
No,
No.
no, they used to do that, but they don't do that anymore.
Okay. Yeah, that's fine. But I think I would be comfortable, let's say, putting 4%, at least also for just for the initial search.
Yep.
P ratio, which is a little bit interesting, because before that the company was showing quite good growth metrics, hence the P was high, but the P of 30 on average is a little bit too high, too ambitious. So
I can also give you some insights from the analyst here. They
yeah,
are giving low estimates of 23 and highs of 33. So
yeah,
the average is 27.
yeah.
Looking
Mm-hmm.
at the estimates that we have here, I would kind of agree. I think 27 might be a bit on the high side, but it's
Yeah, yeah. Well, let's
that's
put
just
27. We can just
yeah,
have a look
especially
later.
but considering of course that they need to keep that up, like the PE ratio of 27 for the next 15 years. I mean, but we can see.
Yep.
Required rate of return. We always put this at 10%. Of course, it can change on how much money you want to take out of this.
Yep.
And then the margin of safety. For my, this is something, of course, maybe Kirill, you have a better understanding of this industry and this market. So, for example, Kirill can do a lower margin of safety. He may be more familiar with products. I'm not really into the American healthcare insurance kind of deal. So I have no clue how that works. For me, that would be a bit higher. But Kirill, maybe we can put it on a healthy 30%
Yeah,
margin
yeah,
of
of
safety.
course, of course, yeah. And again, it's always good just to keep it up front, just to even do the sanity check of like, okay, how realistic my assumptions are, plus putting a little bit of a risk premium, let's say, on
Mhm.
top of it. So it's, yeah, I'm completely fine. If I could put 100 on it, sure, be my guest, as long as it just shows a good number. Yeah. And the last point is the discount rate. Again, we're also putting it around 10 usually, similar to required rate of return depending on the stock. But as a rule of thumb, let's say keep it at 10.
Yes.
Yeah, the magic happens now. So if we hit the analyze button, we see an interesting number.
Yeah, we do see an interesting number, but we also see a lot of outliers. So Warren Buffett's rule of thumb is in the 2K. What is the target valuation formula is really high because of the long projection period and the high PE ratio.
Yeah,
Um, so considering that the target buy price of 246, that is given with the outliers. Maybe if you take an average, it will get around 200-ish.
I think, to
So
be
yeah,
honest, like the most important one, yeah, so the target valuation formula is, yeah, quite high when it gets to that. And again, as Robin said, indeed, it's really because of the future P and then the growth that we put in over a longer period of time. Makes sense. I think what probably makes the most sense here is discounted cash flow formula. Because again, we're just taking the cash flow for the past period, for the past year. Okay, and then again, probably the longer projection period and the growth that we put of 4% could be maybe potentially a little bit too high, but I think I would be comfortable picking up around that. At least, again, if you're interested, if you understand the stock, around let's say the 250 range probably would be comfortable. And yeah, if you also want to put a little bit of margin of safety here, then it would be minus 30% on that number. But yeah, again, what we're just trying to tell you guys, you can clearly see that it's really just a matter of what kind of assumptions you put in here, what kind of, let's say, inside knowledge you got, understanding of the market, understanding of the competition and stuff like that.
exactly. So if we keep everything equal, then and like I said at the beginning, we don't know what implications this whole investigation will have on the company. But if we keep everything the same, the company is operating as usual. The only thing that's changing is how the investors are reacting. Then you can also form your own assumptions on whether this is a good price for you to buy or not. But of course, it's not financial advice. Do your own due diligence, and preferably you do your due diligence with 930. So, Kirill, where can we get the app?
Yeah, of course. Um, just maybe one more thing before we move on to this one. I just also wanted to say with regard to that company that I mentioned in the beginning of the video about the NN Group. So basically, they had the similar case. So it's an insurance company in the Netherlands. They also had a same trouble with the court case, and the stock went down also quite significantly over as soon as it got released. So let's say 15% in a day. Similar situation as UnitedHealth. So that was quite troublesome for the market. But then, to be honest, what literally happened after that, after 1 month or something of negotiations, they just went for a settlement and everything went fine. So if, let's say, there would be a similar trouble like that with an N group, most likely there's going to be also a similar outcome. And then after this investigation, if they will be able to reach certain settlement, maybe outside of the court even, then everything is gonna probably come back to usual, and then it's also gonna get reflected on the stock. So probably also keep that in mind. And if you're interested, just keep an eye on the news as well, like if there are gonna be any additional details about the investigation.
Yeah, yeah, and just to give a bit of of an image with that whole drop of NN, they lost 15% in a day, and they after it got the news got out that this wasn't as a big of a deal, it bounced back heavily, and after a year, it was already up 45%, and now it's at I'm not sure if it's all-time highs. Yeah, it's back at all-time
Yeah.
highs. So you see that these implications is just fear in the investor, and you can capitalize on these swings.
100%. Yeah, and now, yeah, since I interrupted Robin with, again, where can you get that lovely thing? Now I'm finally answering. So you can go to 930.com. The link is going to be in the description as well. You can have different options. You can even check out the demo platform for free. Click that button. No signups, no nothing is needed. If you want to just already have a look, just to see and get the feel of the app, you can start for free. Just sign up. No credit card, no nothing is required. Boom, you're done. If you want more features, if you want, let's say, having a watch list, if you want a stock screener where you're able to screen certain stocks based on different criteria, which is also our new feature. And you can see, for example, you can check it by 930 score, by P ratio, and all the different stuff. You can get it by getting advanced, or starter pack. So starter pack is only 15 euros, maybe a little bit more, a little bit less, depending on the country you live in. One-time payment, nothing else. So you just buy it and you just enjoy it. Advanced, it gives you access to all the features, all the upcoming updates, everything, only 3 euros per month. So it's a small beer. It's a small cup of coffee, let's say, nowadays especially. So make sure you don't miss this opportunity. Get on board quick, because then probably the prices for the advanced ones are gonna also increase further and further. So yeah, make sure to support us, jump on the train, and let's evaluate stocks together.
Let's do it. And with that said, Kirill, thank you for being here and for your lovely insights. Thank you for watching, and we'll see you guys in the next video.